What's up, Banter fam? It's your host Mars here, and in today's show, I'm going to be going through Polygon MATIC, looking through all the fundamentals, explaining what the project is, what it does, and where I see its price potential headed in 22 and beyond. This is the most comprehensive Polygon video you're probably going to see on YouTube. Just before we get into Polygon, because there is a lot to discuss in terms of Matic, I do want to go through the charts just really quick to give you guys a little bit of an update because it has been a wild few days. Bitcoin has been pumping, altcoins have been pumping. I have friends now messaging me, retail friends, asking if it's too late to buy, if Bitcoin's going to drop again. So the FOMO starting to creep back in, retail starting to come back in. So I think it's a good time to just go through the charts quickly before we get into everything Matic Now. If you did take the Cardano trade that I shared on yesterday's show, and Sheldon was also sharing, congratulations. That was a very, very, very good trade. You should be very happy with yourselves. It was roughly an 8% profit there. So with the 10x leverage, for example, that would have been an 80% profit. Basically the perfect entry on the trend line. Some of these other trades as well over the last few days panned out very well. We got the phantom long from this trend all the way up to 34 cents, which was a 24% trade. I closed it a little early, admittedly, but that was a very good trade for those that held. We also had Solana in that range as well. So if you got onto these longs, congratulations. Like, we did very, very well over the last few days on the longs. But is it over? Is this the end of the longs, or are we going to come back down again? That is the question on everyone's lips right now. So the first thing we have to do is look at the Bitcoin price, because what actually happened is we broke out of this range high. So for a while, we were in this range low scenario from kind of this 19K region all the way up to the 23K region. And we said from the very beginning, like, we need to break this range high and confirm over this range high on the daily in order to confirm a bullish trend reversal. Now, what we actually did is we smashed through 23K last night. So we haven't had a daily close above 23 yet, but we did smash through on the 4 hourly, and we still are hovering above 23. So what I see happening for Bitcoin right now is a short-term pullback to the 23K region is very likely, and then it's going to make a big decision. It's probably going to come test 23 and decide whether it can hold this key level, but it is very bullish. We've been above it for the last 8 hours. If we go to the daily, we can see we have broken out on the current daily candle out of this support trend or this pennant trend where we have the support and the resistance. We've broken to the upside. So I've been saying on the last few shows that Bitcoin has to make that big decision. Whichever way it breaks, the move could potentially be quite explosive. As of now, it has broken to the upside, but there's two things I want to see from Bitcoin. The first thing I want to see is a successful retest of the 23K region in order for me to get bullish confirmation. The second piece of confirmation that I want to see from Bitcoin from a bullish perspective is a daily close above this top support channel. Obviously, we have been touching this 50-day moving average, which has acted as a little bit of resistance at the moment. Hopefully, we can close above that, and that would be a bullish indicator that Bitcoin can push to the upside. But if we do close above this line on the daily and we do successfully retest 23, then what is the upside potential? How high could we potentially be going from this rally? Well, what I'm going to do is go into the weekly to give us a more macro perspective. And I think there's one key indicator right now we all should be looking at, and this is the 200-day moving average. We can see this blue line here, very, very, very strong resistance, and that is currently sitting around the 25.1K mark. This is the next level that if Bitcoin successfully retests and we do make a push upwards, this is the next level that I would be looking at, and this becomes the next key level. If we break through this, then we're going to 26,500, or very, very strong likelihood we're going to 26,500, but this is the next kind of key level to take a look at. Just keep in mind that currently it's still 7% away. So if we do test that level, that probably means altcoins go on a huge rally in the meantime, or at least, Bitcoin gets a huge rally. We've seen a bit of liquidity being sucked from the alts at the moment with the Bitcoin dominance, but that is the next level I am looking at. So we do want to see this close. Just to give you guys a quick update, we do want to see a retest and a daily close above the range high. That would be bullish. On the retest, potentially, is this a chance to load up on some altcoins? I think it potentially is if you have a very tight stop. Remember, guys, this market at the moment is showing a bullish trend. You never want to fight the trend in crypto. So shorting this market right now for me is a little bit risky because we are showing, a bullish continuation. We have multiple higher lows. We've broken out of range high. We've gotten some serious volume starting to kick in. The RSI is looking a little toppy on some of the lower time frames, but the market continues to run against that. It would just be a little bit, in my opinion, silly to be kind of shorting this market at the moment, like right now, just because, the trend is bullish and you want to stick to the trend. In Trading is not a very hard game when you break it down to its basics. The basics are you want to stay on the right side of the trend as long as possible. And right now, if you stay on the right side of the trend, if it's a bullish trend, you're going to make profits more than you lose. And if you stay on the bearish side of the trend when the market's going down, you're going to make profits more often than you lose. So it's like a simple game when you break it down to its essence. Right now, I'm looking for longs, not looking for shorts. If we do get a reversal, one of the ways this could substantiate is potentially, a break past 23K, a retest, and then a rejection. That would indicate we're coming back down to 21 to 22. That would be my indicator to short, but I'm not going to short as long as we're sitting above this level right here. In terms of the altcoins, what am I seeing? Well, if we do get that retest of the 23, it's a potential load up zone. Just remember, I'm not a professional trader. Sheldon's been doing this for years. I've only been really seriously trading for like 3 to 6 months. So I'm not a professional. This is just my opinion. My strength is the fundamentals, but I figure I may as well give you my opinion on the trading side anyway. If Bitcoin comes down to 23, what I'm going to be looking at doing is adding to my alt bags just a little bit with tight stops. So, we've got Solana starting to come down a bit. If Bitcoin comes down, then I think it's logical to expect Sol. We can find it in the 42 to 43.40 region. That's something I'm looking at adding a little bit to my bags. Phantom, we did get the lovely breakout of this at the 27 cent region. It has pushed up. It's facing resistance, actually flipping into support at 34 cents. It will probably break through if Bitcoin loses steam, just because, these alts can't keep running forever. So I am expecting Phantom to pull back into this region here, which is the 31 to 32.50 cent region, 32.5 cents region. That could potentially be a good load up zone for Phantom. Obviously, with a tight stop loss underneath, we have to be responsible with risk management. ADA as well. ADA was definitely my best trade over the last couple of days. That was the big one. Unfortunately, I only got 1/3 of my entry in. I really wanted to load up on this because, we've been saying from the beginning, as soon as ADA breaks this long-term trend that we had on the 4-hourly, it was going to absolutely explode. So I was prepping for a really big run on ADA, but what ended up happening was I got my initial entry and then it just started pumping. So still very happy to make profits there. And I know a lot of you made profits on ADA as well. So congrats on that trade. It was a very, very good one. It was more than at its peak, 10%, which is like a double your money with leverage situation, which was very good. But I am expecting the ADA pullback now. It's starting to show signs of reversal on the shorter time frames. So my next target is 49 cents to 50 cents as a potential load up zone if Bitcoin pulls back. So that's kind of what I'm looking at with the alts. Just a little bit of an update for you guys. But dominance is showing some strength. So what we saw was liquidity being sucked. Obviously, it started with the alts, which is kind of an interesting occurrence because usually the pump starts with Bitcoin and then liquidity goes to the alts. But this time what we saw was the alts pumped first and then liquidity got sucked back into Bitcoin. So then the obvious long at around 22,500 became Bitcoin because a lot of the alts started to show signs of topping and we got liquidity back into Bitcoin, which is actually very, very bullish. Usually when we see the alts shifting back into BTC like this in the fashion that it did, it actually is quite a bullish sign because liquidity staying in the market, considering the alts didn't dump that much, but Bitcoin went on a run. Like a lot of these alts, they're still very, very close to their local highs. So, quite a bullish sign for the market. Honestly, the strength has been surprising me recently. But remember, obviously, don't FOMO in, don't go too crazy. If you're adding to your long-term spot bags, I'm assuming you have a DCA plan, but this isn't really a range where I'm going crazy with my DCAs. Like it's a little bit high for my liking from a long-term accumulation perspective in terms of, increasing my DCA size. Of course, I have a regular DCA plan, which I stick to. But in terms of the trades, right now, I'm kind of looking at these shorter-term longs until proven wrong. And then obviously, if Bitcoin does flip bearish, then we start shorting again. But for now, that is what I'm looking at in the market. Remember, if you guys do want to trade, you've got this link in the description. that will give you a $4,200 sign-up bonus to ByBit. So if you want to get involved with the trading, pocket yourself $4,200, depending on how much you deposit, of course, and sign up. And we also 10x accounts live on the show. So make sure you get involved with a ByBit account. Link in the description while you still can with this bonus. It's a pretty nice bonus for you guys there. So yeah, that is that. Let's get straight into the Polygon talk because this is the major topic of the video, and a lot has been happening with Matic over the past few weeks, which I want to update you on. So this video basically is going to give you a comprehensive analysis and a comprehensive overview of what Matic is, what Matic does, what I think its potential is in the future, because the issue I'm seeing right now is a lot of people are just FOMOing in. A lot of people have seen this massive run in price. It's 215% up since its lows. And a lot of people are, seeing this massive run in price and they are FOMOing in. And they don't really know what it does. They don't really know what its potential is. And when you're investing in a project long term, you want to have a clear and a full understanding of what it does, because if Matic just crashes tomorrow, let's say Matic crashed, and you FOMO'd into Matic at 90 cents and you didn't know what it did, imagine how difficult it would be to hold this, because you essentially don't have a long-term thesis. You'd likely capitulate. And imagine when Matic crashes down to 30 cents and like it did, and then pumps again, you likely wouldn't have been buying at 30 cents because you didn't have conviction or you didn't know what it actually did. So the number one component of investing is actually understanding what a project does, and furthermore, actually understanding its potential and its long-term price potential. Because these 3Xs in the short term, obviously that's a massive move. That's a great return if you're on the receiving end of it. But long term, we're interested in, the price potential in 2, 3, 4 years. Obviously, you can trade Matic based on the charts, but, we want to know where Matic can be headed in the very, very long term. We want to know from a long-term perspective, from a spot perspective, if we're accumulating, what it actually does and what problems it aims to solve. So today's video is going to give you an explanation of exactly that. I did a thread on my Twitter last night. I want to break it down and give you some additional information and also kind of summarize that thread, because it was very long, and I think it's just a lot easier and a lot better for you guys if I break it down live on video instead. So let's get straight into the show. So I did this thread on Matic. I need to scroll up to the very top. And I said Polygon is one of the most exciting projects in crypto. It's been one of the best performers in the crypto market. Obviously, it's up 215% from its lows. Not many other projects have pumped that hard. It's now down 67% from its highs, from its all-time high. If we look at some of these other alts, they're down roughly 80 to 90%. Obviously, Solana, AVAX, Phantom, a lot of them are down in the 80% range. Matic is now only down 67%. So in terms of relative strength, it has technically been one of the best performers during this bear market, despite getting hit quite heavily initially. Their business development team has been very active with announcing key partnerships, which have been a real key to its revival. So I'm going to go through its tokenomics, its ecosystem, its DeFi protocols, its backers, and its future potential, including its technology, to give you guys a more comprehensive view of what Matic does and why I'm adding Matic to my long-term bags. So Polygon was founded in 2017. When they first founded it, there was 3 founders. They founded it with the logic of scaling Ethereum. So obviously, it's very clear Ethereum has a scaling problem due to the blockchain trilemma issue. So Bitcoin, although relatively secure, relatively decentralized, it basically inhibits its ability to scale. We know what the blockchain trilemma is, and it's this theory that blockchains in 2021 and blockchains still currently in 2022 have an issue of not being able to solve all 3 key issues of scalability, security, and decentralization at once. We still haven't seen to this day a blockchain which has been able to accomplish all 3. And Ethereum itself, although relatively decentralized compared to other blockchains, relatively secure to other blockchains, isn't very scalable. We know how high the gas fees have been over the last few months, although it's come down. Gas fees on Ethereum are traditionally very, very high. We know how congested the Ethereum network becomes, and it basically isn't scalable on proof of work. Now, the ETH merge is taking a step forward to actually solving this issue, but Polygon identified this issue, 5 years ago, and they said, we need to do something about this. If, we want Ethereum to succeed, we need to help it scale. So that's why they launched in 2017. And for 4 years, that was their mission. But in 2021, they changed their focus a little bit. And although they were still very focused on scaling Ethereum, they rebranded from Matic purely to Polygon, as identifying a need in the space to become the Swiss Army knife of scaling solutions. So they don't only just want to be, a single-faceted way to scale Ethereum. They want to be a multifaceted, very versatile blockchain, which obviously scales Ethereum, but is host to multiple key pieces of infrastructure that can actually help Ethereum scale and can actually be home to many, many, many projects, gaming projects, DeFi projects, etc. So I think 2021 was the very beginning of a new era for Polygon. We saw multiple funding rounds off the back of this narrative shift, and we obviously, we've seen the price explode last year, come down with the rest of the market and recover quite strongly now off the back of strong business development. But their key focus has shifted a little bit. And I think, it's very crucial to discuss when we're weighing the potential of Polygon long term, because it's a very different situation sitting here now talking about Matic to what it was talking about Matic 12 months ago. So in its essence, Polygon is designed to help Ethereum scale, featuring a modular, flexible framework, which is the Polygon SDK development kit that allows developers to build and connect layer 2 infrastructures. So this is kind of like the key principle of how Polygon's tech works. You have Ethereum as the settlement layer. You have the Polygon main chain, so the Matic proof of stake chain. And then off the back of that, you have multiple pieces of infrastructure which help Polygon scale. So Polygon is actually home to side chains, Optimistic and zk rollups. Big announcements coming on this, I think, tomorrow. I'll get into that later in the video. Very big announcement coming. Plasma chains, and hybrid scaling solutions. So we see Polygon utilizes multiple pieces of infrastructure to actually scale above its transaction layer. And Polygon's thesis, as I said, is becoming this Swiss Army knife because it has all of these, critical, multifaceted approaches to scaling that, many other chains can't actually be home to. Like, let's say a Solana, for example, it utilizes sharding. It has a very clear path to scalability, but it doesn't have this Lego configuration where it can integrate multiple side chains, rollups, plasma chains, scaling solutions, etc. off the back of it. So Polygon is taking a very different approach to other chains. I'm not saying one is right or wrong or one's better than the other. I'm just saying, it operates very, very differently to other chains. I think the most important thing in terms of the tech, and I won't go too deep into the tech in today's video because I know you guys want to know about more so the fundamentals and the price potential. But I do want to explain the tech just quickly because I think it's very important to note what it actually does. At the end of the day, this is blockchain, so the tech is important, whether, we all want to make money, but the tech is relatively important in terms of its price potential. You have to understand that layer 2s are stacked on top of layer 1. So you have the base layer, the layer 1s, and then the layer 2s are secondary networks which work in parallel or independent of the main chain. So a very easy visualization would be this pyramid. You have Ethereum as the layer 1, and then you have Polygon stacking on top of it as the layer 2. Now, very quickly, Polygon's consensus mechanism follows the proof of stake consensus, meaning that it has validator nodes like other major L1s, meaning you stake Matic, and that is how you secure the network. And Matic fees and distributions are paid out to Matic proof of stake stakers. So if you stake Matic in a validator node, you receive around 14% a year, you secure the network, and you get paid fees in return. Very common mechanism, but Polygon kind of separates itself from the other blockchains in one way. It splits its proof of stake consensus mechanism into 3 layers. It has the ETH layer, so it deploys a set of contracts on the Ethereum mainnet. It has the BOR, which is a block production layer, which aggregates transactions into blocks. Then it has the Heimdall, which is the validation layer, which supports validator nodes. And this is the one that I was talking about in terms of the proof of stake Matic validators. So EVM, fast consensus, proof of stake, and obviously it has its Ethereum contracts, which essentially, operate as checkpoints for the Matic proof of stake chain to validate. So I said before that Matic has a base validation layer, but it has many other pieces of tech which help it scale. As I said, I won't get too much into the detail. If you read my thread, you'll get more details on the tech, but the key things to know are the Plasma-enabled side chains, EVM side chains, and Optimistic zk rollups. This is a visualization of how it actually works. It starts on the Ethereum mainnet. It filters through the public Plasma checkpoint, and then it scales on the Matic sidechain. And there is a bridge between Plasma and Ethereum, which is the root chain, to actually help it scale. Now, zero knowledge rollups are one of the key things that Polygon is working on. And it's one of the key things that I think we're going to get an announcement on very soon. I said there'll be a big announcement for Polygon, and I think this is what it will be tomorrow. Now, I'm not too sure in 24 hours. We're going to know for sure. But either way, there's been a lot of rumors about zero knowledge rollups, which are essentially a tactic used to increase throughput on Ethereum without sacrificing decentralization. There is a good article on what ZK rollups are on my Twitter. It's basically a scaling solution. It's quite technical, but zkEVM is basically the rumor of what Polygon's announcement is going to be tomorrow, and it's a zero knowledge EVM compatible rollup, which is essentially a virtual machine which generates in and of itself zero knowledge proof to verify the correctness of programs. So this is a very interesting piece of technology that a lot of people said wouldn't be coming for years. I remember like last year, people were saying, oh, zkEVM isn't going to come till 2024, 2025. Polygon said, we're working on it. And we're sitting here today in 2022, and we may be getting zkEVM on Polygon within the next few months, which I think is, if successful, obviously, there's a big asterisk here, with the word if, but if successful, will be very, very important to help Polygon scale. Now, from a development perspective, scaling is everything. And the reason I talk about the tech is because announcements like this actually incentivize developers to develop on Polygon. If you have the most scalable tech, now I'm not saying it is the most scalable because proof is in the pudding. Funnily enough, it's called ZK proofs, but the proof is in the pudding with some of these changes and with some of these infrastructure updates, because, we need to see a direct enhancement to Polygon scaling. It can already do like 5 million transactions a day, but, it was getting relatively congested. So we do need to see the network actually be able to handle that much activity. But if it can, then that is a great incentive for developers to come and develop on Polygon. And this is kind of the start of the real interesting stuff in today's video, because this is where the development begins, and this is where we see the true reflection on the charts. So Electric Capital's 2021 Developer Activity Report had Polygon as the 6th most active chain by active developers. We have Solana, Cosmos, Bitcoin, Nia, Cardano, and then Polygon, Binance Smart Chain, and Kusama coming in slightly after that. So we have Nia in this upper echelon of development activity, very close to Nia, very close to ADA and BSC. It was also the fastest growing, 10th fastest growing ecosystem by active developers. So it's very, very important because we know how the flow of funds work. It starts with capital. So it starts with VCs, it starts with investment, it starts with the seed rounds. Then that incentivizes developers to develop. When there's development grants and developers can actually make, a tangible income off development, then that incentivizes them to work on a chain, of course. Great development leads to quality dApps. Quality dApps obviously attract users because the better the applications on a platform, the better the games on a platform, the better the NFT projects on a platform, the more users will use the platform. That leads to transactions because obviously that results in more connection points. So the more users, the more network effect, the more transactions take place as these users speak to each other, so to speak. That reflects in the TVL, the total value locked from a DeFi perspective, and that obviously increases the price because we start to see the tangible metrics. You'll often see price jumps slightly ahead of things because retail isn't stupid. In 2021, this flow was probably a lot more obvious, but I think now people are getting smarter and price starts to preempt this flow of funds a little bit. So, if there's a major capital investment, that does impact the price from a DCF, discounted cash flow model perspective, because a lot of people are pricing in future growth based on the perception that capital inflows will increase TVL later down the track. So this is kind of interesting because we do jump the gun a little bit, but obviously the true retail FOMO and the true pump in the price happens around step 3 and 4, because that's when retail gets involved. VCs can pump it all they like. We can pump it all they like as crypto enthusiasts. But at the end of the day, that major price appreciation happens once real user adoption occurs, because that obviously affects future valuations. The DeFi side of things, I think, is really, really interesting because Polygon is now the 6th biggest chain in terms of TVL on DeFi. It's home to, I think, 257 projects, which is crazy. 276 projects with the TVL of 1.82 billion. From a market cap to TVL perspective, it's still relatively high, roughly a 2x to Avalanche, slightly lower than Solana and BSC, but still fairly high, slightly higher than Ethereum. but not crazily overpriced in my opinion from a TVL perspective. Multiple projects comprise this TVL, 276 projects comprise it, but RV, QuickSwap, and Curve are the three main ones, and they constitute more than 50% of Polygon's total TVL. Year to date, we see the TVL declining roughly 67% from January 1st at 5.42 billion to 1.82 billion today. This 67% decline is in line with the total market correction of 65%, so slightly more than the aggregate market decline in TVL, but at the same time, it's fairly on par. So, I mean, it just shows that Polygon in a risk-on environment is, fairly mediocre or taking the median route to its price reaction in terms of TVL, which means, it's probably a medium risk profile. That's at least how the market's viewing it. Unlike something like a Phantom, which clearly pumps massively during a bull run, but takes a much larger hit during times of volatility, which has obviously a higher risk profile if we consider DeFi TVL as one of the indicators of a project's risk profile, which I think that's an important thing to note. So it's definitely something that I take into consideration. 52 of these 275 projects are built on Polygon. So obviously not every single project built or operating on Polygon is built on Polygon, but we do see 57 active native Polygon dApps, some of which are listed on DeFiPrime.com. I think it's a great website because you can actually scroll through. There's a link in my thread to this website. And you can scroll through and look at every single dApp built on Polygon. And if you want to click on one, you can click on it and go straight to their website. So very, very cool website that aggregates based on category all the different DeFi protocols on an ecosystem. Polygon's one of them. But it's not just DeFi applications adopting Polygon. And I think this is kind of the most exciting thing about Polygon, in my opinion, or at least one of the most exciting things. It's the gaming and the NFT ecosystem building on Polygon. We know how big gaming is going to be in the future, or at least that's a narrative that I am very bullish on personally. I know Johnny or Hustle is very bullish on gaming as well, of course, with his daily gaming and NFT show. But I think what people aren't truly realizing is just how much development is happening on Polygon from a gaming perspective. I'll give you an example of this. A friend recently reached out to me last night and he texted me and he said, I've been speaking to some major executives at some really big hedge funds, and they believe that Polygon will actually be the main chain for gaming in the future. So bit of inside word there. There are top executives that hold the thesis that Polygon will be the top gaming and NFT chain. Now, I think it'll be a little bit of a race between a few chains. I think we've got Solana, which is very promising for gaming. I think AVAX is very promising for gaming with its security through subnets. I think Polygon probably is the next one, though, or if not, slightly better than AVAX. It's probably up there with Solana because it's scalable and it also has that direct tie to Ethereum. So obviously, Ethereum has the biggest user base. It makes a lot of sense to deploy a dApp on Polygon if it's scalable enough to handle it, which obviously relies on some of these developments like ZK rollups being effective. But if it is scalable enough, which I believe it will be, then it makes sense to build on Polygon. Like, just ask yourself, right? If you're a developer and you're building a game, what chain would you build on? Would you build on a chain that has direct compatibility and very easy bridging from Ethereum, or would you build on another native chain? Now, there's arguments for both. I'll use Solana as an example. There is arguments to harness the Sol community. There's arguments to harness the power of Solana scalability. There are arguments to take advantage of the incentives on a chain like Solana. So it does make sense, but at the same time, I think it's equally as tempting from a development standpoint to build on Polygon, given its Ethereum compatibility, because obviously Solana is not EVM compatible, and given its ease of access in terms of one, being EVM compatible, and two, being a chain that already has so many users and so many games and so much infrastructure already built around it. We saw it did 5 million transactions a day in recent times. Obviously, Solana is another great example, but I think those two chains are the ones that can be very, very big gaming chains in the future. So when I look at gaming and NFTs, let's have a look at what games are currently live on Polygon. We got Sandbox, very, very large on Polygon. They've got a partnership with Decentraland. So although it's not directly built on Polygon, they do have a partnership for their asset marketplaces. Cyberkongs, another big project built on Polygon. Arc, Realchain, Rebelbot, Sunflowerland, Snook, just an example of many, many games on Polygon. I think there's like 60 at the moment. And the other quite big thing is that Polygon actually set up a $100 million fund to support gaming projects called Polygon Studios. So Polygon Studios is a dedicated NFT gaming and metaverse division built on top of Polygon. So they're so bullish as a team on the future of NFTs and gaming that they went and they built their own studio for gaming, and they funded it with $100 million, which not many other chains have done. And that's one of the reasons why I think it can become one of the biggest gaming chains, because of that. Now, by the way, there are caveats to everything I say in this video. Like I'm trying to take an objective tone. It does come across as bullish because I believe in the project. At the end of the video, I will give some reasons, some counterpoints for the sake of objectivity for you guys to consider. I just want to state that now before you guys are going, oh, you're shilling Polygon. I definitely will give some counterpoints at the end of the show. But I just do want to kind of explain the narrative here and where Polygon slots into the total crypto ecosystem as a whole, everyone. So many of the top games are building, and we saw Ryan Watt did a thread, and he announced 3 new games, Play Wildcard, he announced Play Metalcore, and he announced Derby Stars, a horse racing game. So 3 games. This game actually looks very cool. It's like a combat game, open world, kind of like a shooter. It looks very, very, very cool. And he launched another game here kind of with a more animated, futuristic style. So 2 pretty cool games, but at the end of the day, what it indicates is that there is active game development on Polygon, and Realms of Eternity is another great project that's launching on Polygon. That's a very cool open world game. We got Rev Racing, Playful Studios launching 3 titles, and then Aave Gotchi as well. So there's a few games launching on Polygon very, very soon. And I know from a fact, anecdotally, from the people I've been speaking to, that a lot more gaming development is happening on the back end. Now, I did do a video on Polygon's partnerships the other day, so I won't take up too much time explaining them now, but there are a few very important partnerships to note just quickly, because the main reason for the big pump we've gotten over the last few weeks is the business development. Now, in my opinion, what separates Polygon and other projects that are performing as well is Matic's business development. Their biz dev team is the best biz dev team in crypto. They're extremely active with procuring new partnerships. They're extremely active on a marketing front in terms of announcing them. They're extremely active with enterprise. They are just very, very switched on with business development. Now, this may not actually reflect on the tech itself, and in fact, this may inflate the valuation of the project short term. But what it does highlight is their tenacity and their business acumen. And I think it's one of the reasons why Polygon is looking very soon of breaching the top 10, because their biz dev is on another level. Many other projects are not on the same level. For example, Phantom, great technology. I do believe in the Phantom tech. I think it's very fast. It can become very scalable. But from a business development perspective, honestly, they've been extremely underwhelming. A lack of partnerships, in my opinion, compared to other chains. A lack of willingness to accept VC funding. There's a few issues there, despite the tech being fantastic. Polygon, although the tech may not be perfect yet, they have been very active with their partnerships, which is one of the main reasons why they're defiant in terms of price, because they've been able to kind of withstand this bear market with great biz dev. And some of the partnerships they announced was the Disney partnership, which is they're part of their Web3 Accelerator program. Six different blockchains were picked for Disney, Matic being one of them, and they're going to be building an NFT marketplace and Web3 experiences on top of Polygon as one of their primary partners. Very bullish, because I think that could honestly be awesome. Number 2 was in May, which was the Meta Facebook announcement. The Meta Facebook announcement was their NFTs being built on Polygon. We know they're getting Instagram and Facebook integration, Instagram being the 6th largest social media in the world. And then the third one that I think is quite big is the Stripe partnership. Stripe is one of the biggest payment online facilitators that obviously is a payment gateway through websites. It has 3.1 million active websites under its belt, and you'll soon be able to use the Matic network to pay using Ethereum or Matic tokens. They are rolling this out through Twitter first, in order to pay creators through monetization. So ticketed spaces, Twitter Blue, etc. That's kind of how they're starting to roll it out. Soon we could probably see, mass integration on a bigger scale. which would obviously mean you'll be able to pay online on websites using Matic, which is using the Matic network, I should say, which is big. And then they had Reddit and DraftKings announcements. I went into more depth on my thread, but I don't want to go too far into it today. Another factor, and there's just so much here, just stacks on top of each other. There's just so much happening at the moment, which is why this video is so important right now. After the collapse of Terra, we know what happened to Luna. 48 protocols didn't have a home, or if they did, they weren't comfortable maintaining their home on the new Terra chain. And 48 protocols decided to migrate to Polygon. 48 of Terra protocols are migrating to Polygon. They didn't pick AVAX. They didn't pick Solana. They didn't pick BSC. They didn't pick Ethereum. They picked Polygon, which is crazy to me. And it's an extremely bullish indicator because some of the tech on Terra is fantastic. So 48 migrated to Polygon. And they're officially expected to be migrated fully by the end of the year. FWiz, the CEO of Polygon Studios, Ryan Wyatt, is going to be said that they would be fully migrated by the end of the year. So that is pretty awesome. That was announced in the TechCrunch article. And I think the next very important thing to talk about is the Polygon backers. So we know there's a lot of development happening on chain. We know it's good for gaming. We know the tech is scaling to be, very solid. We know that the DeFi ecosystem is thriving despite the knock in TVL, but none of this is possible without financial backing. And I'm such a big proponent of VC backing and financial backing in crypto as being a constituent of crypto success. It's one of the first things I look for when I invest in a project. Who are the backers? Yeah, sometimes it doesn't matter. We know 3 Arrows Capital, they were very highly rated, and basically everything they went bust. So a lot of the logic there doesn't fully check out. So we can't always look at VCs as an indicator as to whether a project's successful or not, because they do chuck money everywhere. They kind of chuck money at the wall and hope it sticks, essentially, is the strategy for a lot of these VCs. But the fact a project has funding does open up business development opportunities other projects don't have. So the more funding a project has, the more incentives it can give to developers. We know how powerful the flow of funds model is. Therefore, we have to consider which backers a chain has in order to verify whether it's solid. It's just, one of the key things that I look for. And when I went through the data and I did some digging, I realized that they had a $450 million raise this February, led by Sequoia Capital, one of the biggest crypto VCs and one of the most respected crypto VCs. $400 million was raised, backed by over 38 projects. Kevin O'Leary and Mark Cuban from Shark Tank being two of them, Tiger Global, Galaxy Digital, Republic Capital, a lot of big Electric Capital, Bitfinex, Celsius, unfortunately. Not sure if we're going to see those funds again. Blue Pool Capital, Transcend Fund, Elevation Capital, June Ventures, like some of the biggest, Dragonfly Capital, some of the biggest crypto VCs, all investing in the latest raise, which is pretty big. And it was cumulatively over $450 million, as I said, including Mark Cuban as one of the backers. And then I went to look at the initial investors, and I realized that AU21, Binance Labs, Alameda Research, and Coinbase Ventures all hold Matic and are all big investors in Matic. Binance, Alameda, and Coinbase are as big as it gets, basically. They have Matic exposure, and the latest raise granted exposure to a whole new crop of VCs. So that is just one indicator as to the belief the general market has in Matic as the tech long term. So clearly Polygon has the developers, clearly it has the backers and the partners, but what about the tokenomics? Because if the tokenomics suck, the project can't pump, regardless if it has $5 billion of backing. If the token's just diluted to death, as we've seen with many DeFi protocols over the last 6 months, then it can't succeed. So let's look at the tokenomics and let's see from a tokenomics perspective if there's validity in a long-term Matic investment. Now, when I go through the tokenomics, a few things stand out. The first thing is the initial token distribution, 23% ecosystem, 21% foundation, 16% team, 4% advisors. So if we break this down, the rewards and airdrops are 35%. The founders in the project retain 41.9%, around half of which are project ecosystem funds. 22.8% are investors. A little bit high on the project side. I think it is a little bit high, but it's not horrible tokenomics in my opinion from a distribution perspective. I've certainly seen a lot worse. The team taking 16% is not awful. It makes sense to give investors back through the seed round 3.8%. Staking rewards are 12%, which makes sense. The foundation, 21% makes sense. Ecosystem's the most important at 23%. It makes sense. To me, it makes sense. It's pretty stock standard. A little bit high on the team side, but look, it's nothing crazy. We've seen other L1s launch with 30% allocations to the team, so it's not too bad in my opinion. Currently, 80% of Matic tokens are in circulation already. So if we go into Masari and we look at the supply schedule, we can look at the liquid supply curve. So there's 10 billion total Matic tokens to be released onto the market. That's its fully diluted. That's its total supply. As of now, 80% or 8 billion of those 10 billion have been released. Only 20% are yet to be released. Of those 20%, 10% of those tokens, roughly, are being released in October 21st to October 28th. There will be an unlock. It's a smaller unlock than the last ones. We see they scale down and down and down. That is the next big unlock this October. After October, there is basically no unlocks. Well, we could see there are unlocks, but they're very, very small and they're just staggered at the kind of a similar pace to what we've seen in the intermediary stage of each unlock. So very, very small supply curve after October, basically negligible supply. So from a tokenomics perspective, that is actually a big tick, massive tick from a liquid supply curve perspective. You're not going to get dumped on by VCs anymore. I can promise you that. Well, at least from a supply curve perspective. Of course, VCs private holdings, they can do what they want with them, but you're not going to get dumped on the unlocks past October. But I mean, it should be priced in by October because the market has that much time to actually price in the impact of this unlock that I think it'll probably be a nothing burger, but still something to keep your eye on, that there is a tiny unlock coming in November. What about the Matic token itself, which has two core functions, which are gas fees and staking? Because the token itself, it can have great tokenomics from a supply perspective, but what it also needs is it needs utility and it needs value accrual. Matic has a very similar value accrual to other L1s. So user growth leads to increased transaction volume. It means more Matic is burnt because Matic is used for gas fees, just like Ethereum. Ethereum's the gas of the Ethereum network. Matic is the gas of the Polygon network. The more Matic that's burnt, the more reduction in supply, which is obviously, beneficial from a price growth perspective, which ends up increasing the demand for staking because of fee incentives, and it also increases the demand for speculation because more Matic being burnt and used increases speculation. So basically with every L1, the more users, the more transactions, the more value accrual. Very linear value accrual, very similar to other L1s through its gas fees. The second value accrual is obviously through its staking because, you need to stake your Matic invalidator nodes to earn rewards. So it does incentivize you to actually stake and lock up your Matic, which reduces the circulating supply. So stock standard stuff for a proof of stake chain, which is good because, I don't think it's a broken system. I think, it's very solid. They aren't going too crazy with their tokenomics. It's standard, it's safe, and I like it. Honestly, I like it. I think the thing that a lot of people discount, though, a lot of people say, gas fees are the only value accrual in L1s. It's actually not true. I think the main thing a lot of people miss out on is the fact that tokens themselves are key resources within an ecosystem. So the Matic token, for example, is a key resource within the Polygon ecosystem. So it's obviously used for gas, but it's also used as a primary starting point to transact, interact, and swap on chain. So the Matic token, obviously, being the native token of the chain, it's going to be used to transact within dApps, within games, within DeFi protocols. It's going to be used to stake. It's going to be used within the ecosystem as a primary token of that ecosystem. Obviously, stable coins on the ecosystem are also going to be utilized, but I think people discount the amount of demand that you actually get from just more users being on the chain, on the token itself. Speculation aside, that's just one way L1s actually accrue value in a less linear fashion. But I highly recommend checking out Masari's article, which I got some great data from in my research piece on Polygon for more data on the tokenomics, because Masari does a great job of summarizing, condensing a lot of this data, which obviously I've put together for you guys in a thread, which is obviously also something that you guys can reference, because you've got this video to reference and look back on. But if you ever need the stats, if you ever want more information, you can simply just bookmark this thread, which is one of the reasons I did it. You just click the share button and then you click bookmark. And if you bookmark the thread, then you'll always have it in your bookmarks folder on the left side of Twitter, even on the mobile phone app. So it's always there. So if you ever, want reconfirmation of a technical fact or of Matic's potential, even if the price is crashing, if it goes back down to 30 cents, you've always kind of got it there to base your research of and look at what's changed since July 19th. What's changed in the token, what's changed in the price. You've got a good reference point. So my Twitter's got a link in the description if you want to obviously check out the main thread, and you can also bookmark it. I recommend doing that just as a way to keep it handy, and so it's always there if you ever need to refer back to it. I did say I want to get into the caveats, because there are a few caveats, and if you're clicking off the video now, maybe that's irresponsible, because it's important to talk about the negatives. This isn't just the bull case here. This is an objective overview of the token. The first thing I want to say is I didn't do this thread because the token was pumping, and I didn't just want to do the thread because Matic kind of is pumping, and that's, me trying to like unload my bags on my followers. In fact, full disclosure, I barely own any Matic, and I'm not just doing it because it's hot. Well, in one way I am, because I think it highlights a key factor, but the point of this thread isn't to pump Matic, or tell you to buy Matic, or prove to you that you should FOMO into Matic. That's not the point of this thread. The reason I did this thread now at the higher prices was actually because I think now it's more valid than ever to remind people of the fundamentals of the actual project. The problem is, a lot of people are FOMOing in right now. A lot of you wanted to FOMO into the project. A lot of my followers wanted to FOMO into the project. So what I wanted to do as a creator was actually give you some data to base your thesis off. If you're FOMOing purely based on price, that's stupid. If you're buying at $1.90 purely based on price, that's stupid. I'm not trying to be a top signal. I'm not trying to make you FOMO in. I'm doing this so you actually have data to now substantiate whether you should invest or not. The reality is, a lot of you and a lot of the retail audience will invest no matter what. They won't look at the investment potential. They don't look at the fundamentals. They just see price go up and they just buy. You guys now actually have some of the fundamentals under your belt, because I've done the thread and the video to help you guys push you along the right path to actually researching Matic. So now if you buy it, and if you choose to buy it, you're doing so under the pretense that you actually know a little bit about the fundamentals and you're not just FOMOing in. So that's the first thing I wanted to say. I thought it was very relevant to do now, because so many people were going Matic, Matic, Matic that don't even know what Matic does. So the real plus is that now you know what Matic does. Cool. I've given you the thread. I've given you the video. Now you know exactly what it does. But the next step is up to you. I have given you a starting point. I've given you a great point to start your research. I've given you multiple perspectives. The great part about content and content creators is not me shilling you a token or giving you all the info. The greatest thing is I've given you mental starting points. Now I've got you thinking about the partnerships. Now I've got you thinking about the DeFi ecosystem. Now I've got you thinking about the technology. And I've given you a starting point to further research that, which means you now have a great starting point to base your research off. But the hard work starts now for you as an investor. If you're seriously interested in learning about crypto and being a good investor, you use this as a starting point and you go and you research each category that I've outlaid for you. Like, I've laid out the technology, the ecosystem, the DeFi protocols, the NFTs, the financial backers, the tokenomics. I've basically given you 20 hours research in one thread, which is fantastic. But at the same time, this is a starting point. This isn't everything you need to know, in the sense that, you can just read this thread and you're done. You know everything about Matic. No, if you want to actually understand what you're investing in, challenge this stuff. Look into the tokenomics, challenge the negatives, look into the partnerships, challenge. Don't just go, oh, Disney partnership, bullish. Challenge it. Be objective. Don't succumb to confirmation bias. And that's the reason why I made this thread. So if 6 months, Matic is 50 cents, do not come back and say, oh, top signal, you pumped Matic at the top. No, I'm not telling you to buy. I'm just giving you the fundamentals to help with your research. That is my strength. My strength as an investor is fundamentals. That is what I will deliver to you day in, day out, regardless of whether Matic is 90 cents or $10. I'll still do threads like this because I want to keep you updated and I want to give you guys the best possible research starting points possible. And that's why I work so hard to give you guys this information, because I want you guys to be on top of your research and not just FOMO in like all these other channels, all right? It's a big disclaimer, but I needed to say that because it pisses me off when people say you're pumping Matic at the top. It's not what I'm doing at all. I'm actually helping people instead of just FOMOing in. Some of the negatives on the topic of negatives, some stuff to consider is the partnerships are not concrete unless something comes out of it. So although Disney, Reddit, Facebook, Stripe, very, very positive announcements, DraftKings, you do have to consider the fact that a lot of this is marketing and a lot of projects use marketing as a tool to pump the token price or at least generate a bit of hype ahead of an announcement, which we're getting tomorrow. So I'm not stupid. I see through this. I know the partnerships are primarily or at least largely a marketing tool. Yes, they can result in some amazing concrete success for a chain, but that concrete that concrete success is only realized after user acquisition. So we have to monitor actually what happens. We can't just go, oh, they're partners with Disney, pump. No, we have to monitor what Disney and Matic are building together. And we have to monitor how many users are growing off the back of that. Secondly, market conditions are not favorable for any chain. So if the bear market continues, I do expect it to continue. I don't think this is a V-shaped recovery by any means. I think the macro conditions are still unfavorable as a whole. 99% of chains rely on capital inflow. Matic does not keep pumping for the sake of pumping. Matic relies on capital inflow like other L1s. So despite its relative strength, no matter how great it is, it still relies on the macro. So it's market condition reliant. The third major caveat is the Ethereum Merge. This is a genuine concern, and it's one of the concerns I had with Polygon in the beginning. Personally, I don't think it's a huge one. I've kind of started to realize where Polygon slots in now. But I think one major argument is that the Ethereum Merge now kind of kicks off this new roadmap for enhanced ETH scaling through sharding, obviously coming a bit later down the track. And the question becomes, can Ethereum eventually scale to the point that layer 2 solutions eventually become irrelevant? Like one day, are we going to see layer 2 solutions not be needed because Ethereum can scale? I personally disagree, because I think Ethereum is a long way from scaling. And I think by the time Ethereum could scale to the point Matic can scale, it's probably going to be like at the best part of a decade. And by that time, Matic's network effect will already have cemented it as a very viable and a very utilized L2. That's my personal thesis. But that is a genuine concern when it comes to investing in L2s. So regardless of my thesis, that is one question you do have to ask yourself, and maybe do a little bit of digging as to the viability of L2s and do a little bit of digging as to Ethereum's path to scalability, how long it will take. Ask questions. To become a better investor, you must ask these questions. I've asked the questions. I've come up with my thesis. It's now time for you to come up with your own thesis. And as I said before, the thread is a guide to researching Matic and its potential. It's important that you do your own research and use this as a starting point, not as a buy signal. I could not be clearer with that message. But I know a lot of you are bullish on Matic, because I'm bullish on Matic long term. So why not look at some potential price levels we can accumulate at? And I'll help you guys with a DCA plan potentially. So with DCAing, remember, it is all based on your risk tolerance. It's all based on your financial goals. So if you choose to invest in Matic, you have to do so in line with your financial goals. So if the first thing you got to do is pick your time horizon. How long do you want to actually hold this for? Do you believe in this for 5 to 10 years? If that's the case, then you aren't as worried about the short-term price, because your goal is to stack as much as possible. If your goal is to swing trade Matic, you're going to be a lot pickier with the price. If your goal is to take heavy profits along the way, you want to be even pickier with the price. So your goal comes first. Once you have your goal, if your goal is to DCA long-term, then you can come up with an accumulation plan. I'll tell you my goal personally. My goal is to accumulate as much spot Matic as possible during the bear market, given the notion that crypto will see a huge bull market or rally within the next 3 years. So that's a very, very broad thesis, but my thesis is that there will be a significant crypto rally larger than the one we've just seen over the last few weeks. over the next couple years, at some point within the next few years. And at that point, I will have have holded enough spot Matic in my wallet to benefit. So my time horizon, let's say, becomes 3 years on Matic, just for example. So with a time horizon of 3 years, okay, I could start DCAing in at key levels. Obviously, the key level was 31 cents. That was where I was DCAing to alts. Admittedly, I didn't buy Matic at 30 cents. It's one that's on my watch list, but I didn't. The next key level is like 45 cents. You've got a key level at 60 cents. This next horizontal at 74 cents is another DCA zone. And as we approach $1, there's a high chance of rejection in the short term. But even you can make the argument with a longer enough time horizon that buying at $1 is not the stupidest decision ever. Personally, I won't buy at $1 because I have a belief that the market has more downside. So I don't really feel that comfortable buying at $1 long term. I just don't. I would much rather wait for a pullback, maybe add a little bit to 74 cents, add a little bit more at 61 cents, and save some cash for another bottom at 31. Just being pragmatic here, DCAing over time, DCAing primarily on red days, not green days. I'm happy to get a pump and then DCA on a pullback. Like if we pulled back, all right, I'll probably buy a little bit here in terms of spot. But remember, this is spot accumulation. So this is like a bag I'm just adding to long term very, very slowly. Like you can literally just add cup of coffee. Like if you don't have much money to invest in, you can put cup of coffee amounts in. Like a few bucks here, a few bucks there. If you've got a little bit more money, $100 here, $100 there. If you're even got even more money, $1,000 here, $1,000 there. It all depends on how much you have to invest. But you just DCA in. You don't go stupid with FOMOing in. That's the number one tip when it comes to long-term investing. Are you investing for the short term? Well, you've already missed the major rallies. So now if you're investing for the short term, your primary objective becomes probably getting this next pullback. If we do end up pulling back, then if Bitcoin is looking good from a fundamental perspective, then longing after the pullback is the only real long you can take. I wouldn't be longing here. Or if Bitcoin is showing signs of rejection, then shorting it around $1 could be a potential play. And I'm not opposed to shorting it short term because I don't marry my bag short term. Like I'll buy or short anything if it can make me money on a trade. This video is more geared towards the long-term investors because fundamentals like its technology don't typically, unless there's a big announcement, don't typically impact short-term price. That's more of a long-term outlook, right? So yeah, I never said buy in this video. In fact, not once I said buy. All I said was, I gave you the comprehensive analysis of the fundamentals. Now it's time for you to do your own research. Comments like this are so dumb. I genuinely think you guys don't listen when I see comments like buy Matic, crush, perfect timing. Like, fuck, I never said buy. I literally said in the thread, don't buy. What did I say? Not as a buy signal. Like, how much more clear can you get than don't buy? Like, how much more clear can you get? Also, in the thumbnail, it says buy Matic with a question mark. Typically, a question mark indicates that it's a question I'm going to answer in the video. It's not a statement. And I answered the question in the video. I said I'm not buying now. So, yeah. Cool. All right. That's that. I answered the thumbnail question, so the video wasn't clickbait. I gave you guys the fundamentals. I gave you guys the thread. Now you have the best comprehensive starting point to research Matic in the world. Congratulations. From as a long-term Matic holder, I'll see you in 3 years. But yeah, no, I hope you guys enjoyed the video. If you did enjoy the information I gave to you guys, remember to smash the like button and subscribe if you're not already subscribed. Remember, if you do want to trade this crazy volatile market, we know volatility is profitable in crypto, then you can sign up for a ByBit account, link in the description. It also obviously helps support us as well. It helps support me spending 20 hours writing stupid 58-part threads like this, so I can pay the bills and keep the lights on. So if you do want to support the channel, that's one way you can do so, is signing up through a ByBit link in the description. And also you get $4,200 back depending on how much you deposit. But thank you guys so much for watching. I will catch you tomorrow. See you in the next one. Peace out.